have been in, you can see that I have been in banking for a very long period of time. I won't go through every bullet point there, but I've spent about 32 years in banking. Most of that has been with HSBC, where I've spent about 19 years and done a number of senior roles. But more importantly, down the bottom there, the last couple of bullet points, it's what I did more in the industry, in the Australian market over a good part of 30 to 40 years, has given me a lot of insights into the property market, particularly with all of the banks that I worked for. I was the key contact for the RBA and APRA, and been a lot of, as I said, boards and committees, which, as I said, equips me to talk a little bit about the economy and also give some insights into what the future holds for us, because it is a very topical thing at the moment. Today's topic, as you have seen, we are going to talk a little bit about the economy. We will talk about the Southeast Queensland market. There has been a lot of talk about where do you invest your money. Hopefully, some of the insights I will give you today regarding the Southeast Queensland market will probably make you interested and perhaps think about that as a location for your investment, for your next investment. What we do in Nivas, just by way of background, is we do a lot of research on where we think is the right place to invest at the right time and the type of property that you should be actually buying. So we do a lot of research around that to actually make the recommendations, because whatever recommendations we make to our listeners and our clients, we want to make sure that you gain by that. So it's all about accumulating wealth through property. And we have been fortunate. We went to Queensland and actually presented to our listeners a couple of years ago when we thought that was the best market to invest in. And we had a lot of people buy house and land there 2 years ago, and they're all sitting on about a 35 to 40% gain on their investments. So why Queensland again? Why have we taken a 2-year pause and come back now? You will soon find out. Similarly, last year we went to Adelaide and we presented Adelaide when we thought Adelaide was the best place to go and invest. And again, those people that have bought there, they are sitting on a capital gain already, only having bought about 6 or 7 months ago. So it's all about buying the right property at the right place at the right time. Okay.
Yep.
I'll kick off now. If everybody can stay on mute, that'd be great. And hopefully and thanks everyone for your time tonight, taking the time out. Hopefully I'll make it insightful and useful for you in terms of understanding the markets and where we're headed. Okay. One of the first things I always start with is what are the key things that actually makes the property market tick? What makes property prices actually tick? Okay. This is in order, in some sort of order. My number one thing there is supply and demand. And I wanna say to every single person listening today that with any commodity, if you don't have demand, it doesn't matter what you do, your property price is not going to go up, or your commodity, it doesn't matter what the commodity is, whether it is cars or whether it is TV, whatever you are actually buying. If there's no demand, you can do whatever you like. It is not going to go up. Okay. It is a key factor. So we saw that during COVID as well, where cars were not coming and car parts were not there. So car prices and secondhand car prices actually shot through the roof. Okay. We saw supply exceed demand in 2021, and that caused property prices to go up a lot more than it otherwise would. The second most important factor there is interest rates. This slide hasn't changed for me for many years that I've been doing these webinars and seminars. So interest rates is very important because interest rates dictate affordability. And interest rates are governed very closely by two things: inflation and wages growth. Rameth, you might want to mute everybody if you can. Thank you. So interest rates are important. We will talk a little bit more about interest rates shortly, and it is very topical for the last 6-7 months. It's been very, very topical in terms of where it's going, and I'll give you a little bit of insight on interest rates. Then third one is also important is the regulator. So the regulator for banks, the regulator for all financial institutions really is APRA and the RBA. And they have been influential in setting lending policy and making sure that banks have the appetite to lend. It is extremely important for the property market, for a healthy property market, you need banks to have the appetite to lend. If the banks stop lending, doesn't matter again what you try, whether there's demand or not demand, you will have an issue. So these three are my top factors. The fourth one becomes very important because you need a healthy economy for property prices to be strong. And the two most important things in the economy is the GDP and the unemployment rates. Why GDP and unemployment rates? Because you need economic growth for people to be employed. You need investments in our economy for people to be employed. And if employment is not there, and if employment really spikes and the economy is going into a recession, well, you can rest assured that property market is going to fall, okay? So those two things, we've got to keep a very, very close eye on the GDP and unemployment. We already are everybody is keeping a very close eye on the inflation and the wages numbers, okay? Because you hear about that in the news so much at the moment. The fifth one there is government spending. Government spending increased and got accelerated for a number of reasons, mostly for post-COVID. There are a lot of infrastructure projects. Even pre-COVID, there were infrastructure projects. And for Queensland, there are a number of things we will talk about shortly. The sixth one there I will touch on, and it is to do with delinquencies and loan write-offs. So if I can give you a little bit of insight in that, because that number, that item is very, very important. So if you have a large number of loans in the banking book, I will just also very quickly point out that Australian banks have half of their balance sheet in residential mortgages, okay? The assets, if a bank has assets of $800 billion in Australia, one of the big four, $400 billion of that will actually be in residential mortgages, 50%. So it's bread and butter business for banks. If banks stop lending in the residential mortgage space, then you know bank shares are going to go down, their profitability is going to go down. This is their bread and butter. So they have to watch very, very closely how much write-offs they're going to have against that asset class. And that's what delinquency is. If you don't pay your loan for 1 month, 2 months, 3 months, you are on a watch list to begin with, then you're on a what they call a worry list. And then they come and give you some nasty letters and they possess your house. Once they take your property, they do what's called a mortgagee in possession sale. If you have a mortgagee in possession sale, then whoever's the highest bidder, they will sell the property. Now, we haven't probably seen mortgagee in possession sales for quite some time in this country. Very few and far between, I should say. So when we last had a recession, 1981, 82, 83, 84, I was here, and I can tell you that things were really bad. There were mortgagee in possession sale auctions every single week. You could go to them and nobody would turn up. So why wouldn't they turn up? Because there was a recession. GDP was in negative. Unemployment was around 7.9. Okay? Inflation was running crazy. And there was no wages growth. So it was a very different economy. And that's why I say to people that when you listen to a news that says property prices could fall 20 to 30 to 35%, which a lot of people predicted during COVID, what needs to happen then is you got to have lots and lots of mortgagee in possession sales. People can't pay off their loans and nobody turning up at the auctions. Well, I can tell you that if there is a mortgage in possession sale anywhere in Sydney or in Australia at the moment, there will be lots of people turning up and bidding for that property because they're waiting to get a bargain. And why is that? We're at 3.5% unemployment. Our economy is still quite strong, still growing. Okay. People have money, they have jobs. And where there is an issue and somebody has to sell their property or they want to save their house, in this environment, you can get a second job or your partner can get a second job. And you can actually find ways to actually pay your mortgage. What I find in Australia, and I've sat on risk committees at a number of banks, and I can tell you that Australians generally pay their mortgages, okay? The delinquencies for mortgages in Australia for residential mortgages is very, very low. Just keep that on the back of your mind because this is not something that people talk much about. So whenever you see a lot of mortgage in possession sales happening, you know that banks are having some issues and therefore their clients are having issues. But at the moment, if there is a mortgage in possession sale, I think you'll find that the property is sold in no time, okay, and at a good price because we are not in a recession and unemployment is still extremely low. Last factor there very quickly is global factors. So global factors like COVID-19, you saw what happened there. The war is going on. That's had inflationary impacts. That's had other impacts for other countries as well. Trade wars, you saw the trade wars between China and the US a few years ago when Trump was in power. All of these factors can have either direct or indirect impact on our property market. So these are my 7 top things that can move the needle on prices. But I will ask you to bookmark number 1, supply and demand, because this is absolutely key, okay? Now, so what's making news at the moment? So on the left side, I've got some negative things in terms of negative for property. On the right side, I've got the positive things which are positive for property. I won't go through all of them, but the very first one there is important because we had a little bit of a crisis on the banking front and people were saying, well, is this a systemic risk? And is it going to mean that a lot of banks are going to go down like we had in the global financial crisis? Well, it was contained really quickly. Contained really quickly because Silicon Valley Bank, the government actually guaranteed them. Then there were a couple of other banks that went down soon after, and they got gobbled up by other big banks. So nobody's liabilities, nobody's deposits in bank actually lost money, okay? Credit Suisse had issues. Again, Deutsche Bank and other banks sort of came into the rescue and the government came to the rescue. So it got all smoothed out really quickly. But one thing that did happen, and I'll come to that slide in a minute, is that the fixed rates came off. Fixed rates came off because the market thought, and it came down a good 40 to 50 basis points, okay? We'll talk about that in a second. And that was because the confidence went away from the market and they thought there could be further repercussions coming out of this. So what I'm cautioning here is that fixed rates can come down rather quickly for when events like this actually happen. RBA, well, I did not predict the 3.85. If I have made 20 predictions in the last 5 years, this is one that I got wrong. Okay. So I'll accept that. I'll cop that. There were 80% of the other economists who did not think it'll go up. We thought a pause will be a little bit longer, but we'll talk more about interest rates shortly. US Fed has increased interest rates again to 5.25. Keep in mind, their inflation is at 5% and they still increase rates by 0.25%. We're still at 7%. We want that to come down. Okay, that's a big thing we're all waiting for. The other negative is this recessionary fears in the US, UK, and Europe. There is recessionary fears. The other thing I have not added on the negative side is that there is a lot of debate going on in the US at the moment on the debt ceiling. The debt ceiling is how much more money can the US actually borrow, or should it borrow? Because they cannot actually meet the interest payment on their borrowing. So they could have a delinquency issue, right? So if the US cannot pay their debt, the interest on their debt never happened in history before, and they decide not to raise the debt ceiling, in other words, not to borrow the money to pay the interest, then we could have the biggest global financial crisis you will have ever seen. Now, I don't know why they are being stubborn about it at the moment, but I'm sure before 1st of June, they're going to make a decision on that. And they will go and borrow more money. So on the right side, we have got positives. So the one positive with this banking crisis that we had was the fact that fixed rates actually came down. And if it was a bigger issue, then they would definitely stop cash rates going up, maybe even bring it down. So it can be a negative and a positive, okay? We know we've got a new government in New South Wales, and stamp duty laws are different in every state, by the way. So if you're not sure about stamp duty and how it works in different states, please feel free to consult us, and we will be happy to guide you, not just on that, but on land tax, on capital gains tax, and other things as well. You need to be mindful of your portfolio and where you invest. We are facing one of the biggest rental crises at the moment. We will talk about that more. And as I said, unemployment is healthy and it's in a good place. That's keeping a lot of things in check, okay? We expect it to go up a little, but it's not happening quickly enough. Migration, everybody knows the numbers were incorrect, and then incorrect again, and then incorrect again. So they've been revised about 3 times since the new government came in. We were always going to have a tsunami of people coming here because we paused for 2 years during COVID. So that's the big story, and that is causing crisis in the rental side and other things. Our GDP is still rising. You know, we're looking at probably 2.5% for the year, but we don't want it to go negative. So RBA will watch that very, very closely to make sure it's in check. A few headlines, recent headlines. So you've seen all of these headlines, so I won't dwell on it. Lots and lots of people are coming here. They're not going to change that. You heard the budget. They're not going to change that. So in the next 2 years, we're going to have significant number of people coming here, the biggest influx of people in the history of Australia. You saw, as I said, the 50 basis points cut in the Commonwealth, and a number of other banks have cut their fixed rates. Didn't make a lot of headlines, but I've got my views on it, on fixed rates in a minute. Inflation, we thought it had peaked. It has peaked, sorry. Interest rates, we thought it had peaked, but it's still struggling to help inflation come down. On the property news, almost every week there's auctions, and you see significantly increased values in some suburb, some auction which has gone 10% higher than what the reserve price was, or 20% higher. All of these things are happening out there. Crazy things are happening out there, okay? And auction clearance rates are still very, very strong, which says to me that people have been waiting to see where the peak for the interest rate was. They're waiting on the sidelines, and then now they're entering the market. Cash rate now, very quickly. So this is the history of cash rates for the last since 1990. So since 1990, what I want to say to all of you, the point I want to make with this graph is that the average for the last 30 plus years has been at 5%. This is the cash rate, okay, has been at 5%. So why are we having so much fuss about, if that was the average, why are we having so much fuss at 3.85? And this is the reason. So the top graph here, a shorter period, and you see over here that we had to bring the rate from around here, we had to bring the rate down to 0.1. So it was always, even if we didn't have inflation, this was a this part was temporary because of COVID. It's once in a 100-year event. So from here to here, somewhere around 0.1 to around 1.5, it was going to come up anyway. Okay. The fact that inflation happened, it had to go up even further. So this short period, it was very steep in a short period, which it doesn't happen all the time. Okay, it happened over here, back here, but it doesn't happen all the time. The steep rise. So that steep rise has happened, and that is causing a bit of pain. But are we too far away? Are we too far away from where the Reserve Bank wants this to be? The Reserve Bank wants somewhere between 2 and 3%. The cash rate to be between 2 and 3. So it shouldn't take us too long to get below 3 again. Okay, we might have some short-term pain. What we're going through at the moment is some short-term pain. Keep in mind, property investment is not about the stock market where you buy today and you sell in a week's time or a year's time. Property market is about accumulating a portfolio, building a portfolio, having a long-term view. Interest rates will go up and down. People will still buy properties. Kindly stay on mute. Thank you. So that's the 2 points I wanted to make there. So where to from here? So the key thing is further tightening will depend on a number of things. We want to see inflation slowing and reducing. We want to see GDP slowing, and we want to see retail sales come down. For these 3 things to happen, all of the people listening today, please stop spending money. Okay, I'm not saying not to buy food and pay electricity. What I'm saying is, if we all stop buying non-essential goods, so stop going to Harvey Norman and JB Hi-Fi and those kind of places, you will find retail sales will go down, GDP will come down, inflation will ultimately come down. So that's the only way it'll happen. If we keep spending money like nothing else has happened, then those figures are not going to come down, and we're going to have a longer period of inflation and a longer period of high and sustained interest rates. So that is what the RBA wants to see. They want to see inflation coming down, GDP coming down. It almost sounds cruel because we also want unemployment to go up. Okay, so we want businesses to do it tough so they actually let go of some people, because 3.5 is too low. We want that to come to 4 and ultimately 4.5. So all those numbers are going to help the RBA to stop the tightening and hopefully see better figures coming our way. And then there is slowdown in some economies. China is okay now at the moment, so they've got rid of the zero COVID policy, but there is potential for recession and stagflation. Stagflation is where you're not actually growing and you're just going sideways for a long time, which is not healthy for your economy. Okay, and global events, we've got to watch global events. So if there's another systemic issue and small systemic issue somewhere, or if there is a war where China invades Taiwan or something that we haven't looked at happens, that could have a big impact as well. So this is the graph I was talking about. The last graph you will see on interest rates. So on the left here, this is the 30-day interbank cash rate futures implied yield curve. So it's a mouthful. What this is, it predicts the rates all the way out to roughly 2 years, okay? So this one's a bit shorter. So this one goes out to October. This one comes out to August. What I'm showing you on the left is the 9th of March, where we thought that was the cash rate at the time. And this is what was predicted in the market. This is what the money market was predicting, that this is what happened. Not the RBA, money market. So you see here that this graph is actually starting to fall because fixed rates are starting to come down. When you set fixed rates, you actually look at this curve, number one. Number two, you look at what's called the bond curve, because bonds go out to 10, 20 years. And then you look at what's called the interest rate swap curve. It's a derivative. You take those 3 figures and you create a yield curve, and that dictates your fixed rates. Okay, fixed rates are not set by the RBA. They don't have a play in it. It's the money market that sets the fixed rates. So fixed rates can fall quickly, and I am predicting that fixed rates in the second half of this year, as soon as some of those good numbers, when I say good numbers, they're really the bad numbers, start coming out in the second quarter, you will see probably by August, September, you'll see fixed rates with a 4 in front. Not 5.3, not 5.4. You're going to see fixed rates at 4, 4.6, 4.7, 4.8. Beginning of next year, you're going to see fixed rates with a 3 in front of it. Okay, that's on the assumption that inflation starts correcting, GDP starts having impact, unemployment starts going up. All of these things that I've just talked about. So that will happen a lot quicker than variable rates. Cash rates will take time to come back. Okay, so fixed rates will be first. And in my personal view, that will fuel the property market again. That will fuel the property market. If somebody is thinking of fixing the interest rate now because it's 5.3, please do not do that. Please do not do that. Wait for another 6 to 12 months before you refix. Okay, please. So what are we going to talk about today? Enough about interest rates. I'm going to talk about Southeast Queensland. If you don't know what Southeast Queensland actually means, then I will try to explain that today. And then we'll go through why Southeast Queensland and why now. What is so important about Southeast Queensland suddenly? Okay. So Southeast Queensland is this section over here on the right. And there's a blown up section of that. So if you haven't been to Queensland, you might have heard of Noosa on the top. And you might have heard of Maroochydore or Mooloolaba up the top of the Sunshine Coast, on the coast here. Then all the way from there, then you come to the Brisbane CBD area over here. You got Moreton Bay, north, you got Moreton Bay, you got Ipswich here. Then you got the Logan Shire, and then you got the Gold Coast. So this is what we call Southeast Queensland. Now, why is this important? So majority of the people in Queensland actually live in Southeast Queensland. So when we say Southeast Queensland, that's what we mean, okay? Now you can see over here very quickly, the growth of population between 2021 and 2041, where the most of them is, so this very dark area you see is Ipswich, okay? The rest of the areas around it all growing quite significantly as well. Big numbers, and I'll show you the numbers more in a minute. Now, there is a 24-page brochure that has been written, and it is well-researched and well-written. It's called Competing for Growth. Where will the next million Southeast Queenslanders live? Now, for all of the people that are in my webinar today, I'm going to give you a copy of this. I didn't write it, but I'm going to share a copy of this. It'll be emailed to every one of you, so you can also see where the population growth is happening. It'll help you in your understanding and give you a bit more insight. So this section we are talking about from Sunshine Coast all the way around here is normally referred to as the Golden Triangle. If you're going to invest in Queensland, you've got to invest in Southeast Queensland. If you're going to invest in Southeast Queensland, you want to be within this triangle, okay? It's important because that's where you're going to see the growth. Now, what's happening in Brisbane? So we have had a correction, 12-month correction, minus 9.8. But keep in mind, that's on the back of a fairly strong property price increase, particularly in 2021 and into half of 2022, okay? Pretty strong property price growth. So some suburbs went up 30, 40%. So we have seen a small correction. Bookmark that, please. On the right side, we have got rentals going up and up and up. Brisbane and Southeast Queensland is now the second most expensive rentals in all of Australia. After Sydney, it's not Melbourne, it's not Perth, it is Southeast Queensland. Their rentals are the highest in dollar terms in Australia after Sydney. Dwelling, the median values have increased substantially. It wasn't that long ago when these figures were in the mid 500s. When I said not long ago, I am talking about just a few years ago, 2-3 years ago, okay? So houses that you could buy in the suburbs for 450, 500 are now 650, 700. And we were selling there 2 years ago. And as I said, that Time on market was in April 22 was 13 days. Now it's 28 days. Is 28 days bad? Absolutely not. It's bad when it's there for 50 days, 55 days, 60 days. Okay. If you can sell your house in 28 days, that is what the norm is. So it's a time. So in terms of timing, we've had a pullback. When you have a pullback, that is the time. This figure here is the one factor that is pushing me in terms of timing to say it is a right time to invest in Southeast Queensland. The other factors I'll talk about in a minute. The other factor that is very, very important, because we work in this industry and we talk to developers every single day, is when developers call us, the market is slow. When we are chasing developers for stock, the market starts getting hot. Okay? The market is starting to warm up. It's not hot yet. It's starting to warm up. So when market starts to warm up, we feel it. Okay? We're chasing them. Hang on, that's stock. You said you're going to give me 2 stocks for 1 week, but you've taken 1 away. Or you're telling me it's already sold. So if the developer is telling me I have 1 week to sell a property, after that he'll give it to somebody else, and then suddenly it becomes 4 days and 3 days and 2 days and 24 hours, then you know that the market is hot. And that's what the market was in 2021. Who feels it first? We see it first. Okay? So it's warming up. I can tell all of you listening, it's warming up. Okay? So keep that on the back of your mind. This is very important. Now, my top 8 reasons why you need to. So that was one, that's intuition, what I just talked about. But what I'm going to talk about now is my top 8 reasons why you need to invest in Southeast Queensland and why you need to act on it now. Okay? There is going to be huge population growth in the next 10 to 15 years. Huge. We'll talk more about that. Southeast Queensland needs 30 to 35,000 homes every year for the next 10 years. Every year. That's not my numbers. That's their government numbers. That is national study numbers. There is huge infrastructure spend happening, and we'll talk more about that. There is correction in prices. Like I said, it's over. It's over. If you think you're going to get a bargain buying in Southeast Queensland in 3 months, 6 months' time, forget it. This is the time to get in. Okay? This is the time to get in. It's warming up now. Strong economic growth and job creation. You'll see more of that in a minute. There's a chronic shortage of properties and there's a rental crisis. You'll see more of that. Okay, Olympic Games is in my top 8. Absolutely, it's important. It's important because Olympic Games is not just about the 2 weeks, and I'll talk more about that shortly. And the last but not least, it's the affordability and demand. So when you're looking at where am I going to buy in Australia, right? You look at what's affordable. If you are looking for a 4-bedroom house, brand new in Sydney, I think all of you would know that it's impossible to buy a brand new house and land package in Sydney for less than 900, 950 now. Okay. And for that, you'd have to be very, very far away from the city. Mostly it's 1 million and above, irrespective of which suburb. It's normally 1 million and above. Okay. So Queensland is forecast to grow. This is Queensland. So let me just tell you one thing. Queensland versus Southeast Queensland. Okay. So 2 different numbers. Queensland is forecast to grow by 1.3 million people. Now, the 24-page booklet I'm going to give you is done by this SAFI, okay? Informed Decisions. And I'll share that with all of you listening today. So these are the numbers. These are the numbers. You can see 2031, 2041. Now, however, 1 million more residents in Queensland by 2032, and Southeast Queensland to have 5.3 million by 2041. So come back to the same map again. This is Southeast Queensland, okay? Now, some of the suburbs, some of the names here. So you'll see Caloundra, that's Sunshine Coast. So Morayfield, Morayfield comes in the Moreton Bay area. High area of growth. Caboolture is just a little bit up. So very close. You're getting very close. You're equidistant to Brisbane CBD or to Sunshine Coast, half an hour either way. So that's a big area of growth. Ripley, Springfield Lakes, and Belbert Park, all these areas here. You saw Ipswich going crazy in terms of forecast. So a lot happening there. Greenbank and the Logan Bow Desert area. Jimboomba, again, Logan area. So all of these shires, suburbs, you've got to watch in terms of growth, because that's where the population is going to grow. If you're looking outside of this, let's say you go buy somewhere out here, I would say don't bother. Please do not bother. I'll say this again, supply and demand. Property prices do not go up unless you've got huge demand. Where does demand come from? Population growth. You've got to invest where there is population growth, 100%. Now, I said I'd talk about infrastructure. So there is enormous amount happening on the infrastructure side, okay? There's billions of dollars been put aside for infrastructure. And what I want to do actually is I want to show you a quick 3-minute video, because videos actually talk louder than what I can show you in slides. Everybody hear that?
Yep, that's all good, Sachin.
Thanks, Ryan. Michael?
Yeah. Sorry.
Yeah. Get out of here. Sorry, guys, bear with me for a second. Again. Okay. Apologies for the technical mishap there. Everybody can still hear me?
Yeah.
Okay, so listen, worth seeing that video, and it doesn't show, it only focuses more on the Brisbane metropolitan area and doesn't cover Gold Coast and so on. But there is, you'll agree that there is significant amount of development being planned for Southeast Queensland. So I won't go through all of these bullet points here, but the boom is going to come from the people that are coming in there. 75,000 new people coming every year for the next 20 years. Okay. For that, you are going to need 30,000 homes, as I said, every year, or 577 new homes every week for the next 20 years to meet the housing demand. There is an incredible amount of money put aside for infrastructure to support all of the things you've just saw. Okay. So this is important. Those boxes that I was talking about, supply and demand, where should you invest? Okay. Now, this came out recently. Queensland's economy now the best performing in the country. This is a report from CommSec. And again, its GDP is growing. Unemployment is still high, but it's coming off. And you know, when you've got so much of infrastructure happening, unemployment and GDP basically stays in check.
Sorry, boss. Just gonna...
And then I did say I'll talk about the Brisbane Olympics. So the Olympics, as you all know, is coming up. Still got 8 years to go. But the key thing here is that it's going to bring lots of jobs, more infrastructure, a lot more tourism, and it's going to deliver a lot more trading opportunities for because you're going to be showcasing Brisbane to the world, and just generally much better for the economy. Excuses again, guys. Couple of technical issues. Okay. Thank you. So in terms of the Olympics, and I won't go through everything in here, but there's a lot of construction boom, and there's acknowledgement that, you know, this is going to be a decade-long Olympics boom. So a lot of people ask me, because of Olympics, where should I invest in Brisbane because of the Olympics? I said, well, it's not all about one center and one place. What the government is actually going to do is, apart from the GABA that you saw and the neighboring areas, there is a lot of things. So the aquatic center, where all the swimming and everything else and diving and so on is going to be in Brisbane City. So it's all over the place. Moreton Bay is going to have a center for boxing, Albion for basketball, Sunshine Coast for more basketball. Then you got gymnastics here happening at Chandler, and Redlands is having canoeing and slalom and all those other things. So there's a number of things being developed all over the Brisbane metropolitan area for the future. But the important thing is that Olympics is not just a 2-week, 3-week, 4-week thing. It is something that you will be gearing up for. The whole world is going to see that the demand that's going to create for Southeast Queensland is going to be substantial. You cannot underestimate that. And I saw that happening in Sydney when the Olympics were held here in 2000. 5 years before and 5 years after, it was enormous. So now I'm going to come to, so you've seen the infrastructure, you've seen the population growth. Now we talk a little bit about the rental vacancy rates. Rental vacancy rates nationally, and I haven't updated this figure, but they haven't changed significantly. But where we are, Brisbane is at 0.6. Perth and Adelaide at chronic levels, but Brisbane's average is 0.6. There are parts of Brisbane where it's 0.1, 0.2. Gold Coast, I know it's almost zero. You cannot find a rental property there. So it is historic lows. These numbers are extremely low. It's causing significant issues, okay? Unlike the rental crisis in Sydney, you have a lot more people living in apartments than you do in Southeast Queensland, okay? Except for the Gold Coast. So the issue with Sydney is that in 2020 and 2021, apartment development pretty much came to a standstill. So your completed apartments now is a lot lower. And the population growth with the 2-year backlog that we are having a tsunami of people coming in now is causing the demand, and the supply at the same time is low. With Southeast Queensland, what happened is there was a huge influx of people. People were coming from Victoria, from New Zealand, from New South Wales. Internal migrants and external migrants really coming through and they did not know how to cope. So their internal migrant in those 2 years, 2021 and 2022, was about 95% above normal rates, okay? And so there was a shortage of housing, and there's still a shortage of housing, and they can't solve it overnight. Like I said, Sydney's rents on the house side and the apartment side is up a lot. 24% for apartments, 19%. Brisbane is second. So they've got 17.4% for houses and 23.6%, okay? So some very big increases in rentals because of the problem we're having, the crisis. This is a crisis that I saw coming for the last 2 years. In middle of 21, I actually predicted this, and I've got the recordings of my webinar. And for the very simple reason, as I've just noted, supply down, demand up. Okay, you can't build properties overnight. Property construction takes a good 2, 3, 4 years. So now the New South Wales government, for example, is releasing more land, but that land is not going to be available for people to live in for at least 3 years. Okay, so there's a crisis happening. I'm not going to dwell on that, but this crisis is only going to worsen through 23 and into 24 for those reasons. And you'll see more headlines. Every week, this will be the biggest issue to be discussed. It won't be climate change, won't be anything else. The biggest issue to be discussed is the housing shortage we are going to be faced with. It's going to get worse. So if rentals have gone up 20%, don't be surprised that in the next 12 months, it's going to go up another 20%. So if you're looking at buying a property today, you don't look at today's rentals, you're going to have to put a premium on that, at least put 10% more on that, okay? Because that's the return you're going to get. At the same time, interest rates are going to come down in 12 months' time. So it's a perfect time to get into this market. Now, people also ask me, so you talk about population growth, where are people actually going? So where is the population growth actually happening? In percentage terms is how we should see this, okay? So up to September 2022, the change, Queensland, 2.2%, okay? Change over previous year. That's pretty high, considering they had a reasonably big amount of population actually coming in during 2021. So listen, this is, I won't dwell on that, but I'll just quickly go through the investment property checklist now. Everybody has a top 10 boxes to tick when you're looking at investment property. I have my top 10, okay? Sometimes, depending on what you're looking for and where you're going, the top 10 might change. You might take 2 out and put 2 new ones in. But have a look at this. Location, very important to buy in locations where there is population growth, where there is infrastructure projects, economic drivers, okay? Where is investment coming in? Where is a new Costco and Bunnings and all those other things coming up, as we saw in Sydney, in Marsden Park, for example? where there is job creation, capital growth prospects, market cycle. Is this a rising market? I am telling you, this is the start of another mini boom in Southeast Queensland. If you miss this, you're going to be paying a premium in 6 months' time. Rental demand and yield never been stronger in the history of Australia. And then all these other things, you have already seen some of the infrastructure. We always lag with local amenities, but it comes with population growth. You got to build more parks, shopping centers, hospitals, schools, etc. And transport, one of the most important things. So listen, Southeast Queensland and all of the suburbs of growth that I mentioned tick the boxes, okay? I won't go through my past predictions and give myself a pat on the back, and I won't go through some of the economic predictions, but I've already said that fixed rates are going to come down, and I've already also said the unemployment expected to increase. We're going to get to 4.5% by middle of next year. Now, so where should you buy, and what is the price point that you're entering into? So this is an example. So we deal, as I said, we deal directly with developers, and we can find properties anywhere in Southeast Queensland. But we are very particular in terms of where you should buy and at what price point to get the best bang for your buck. It's all about, not just about location, it's about entering the market at the right price, okay? So this is Morayfield where, and listen, anyone listening, so if you come back to me or any of my colleagues and say, what's going on at Morayfield? Please give us a full synopsis of Morayfield. We have got all that research with us and we will share that with you, okay? The same thing applies to Park Ridge. Park Ridge was one of the fastest price growth in 2021. So we sold a lot of properties in Park Ridge at around the 450, 460 mark, okay? Now, we are starting at this around this price. There are properties there at 700, there are properties there at 720, there's properties there at 750, okay? Depending on who you go with. You gotta, when you compare another developer, you've got to compare apples with apples. Make sure you've got all the things, fixed site costs, that's a turnkey package, all of those things you need to have a look at. So Park Ridge is still very high on our list, and we're selling there. Ripley is another area that is due to move and is already moving. And look at these price points. They're all around that sort of price mark, around that 600 to 700. Here's one in Collingwood Park. Collingwood Park also comes under the Ipswich Shire, where there's going to be a significant growth. 644 is a steal for something like that. Oxenford, which is coming more towards the Gold Coast now. We've got houses around that 799, but the rentals there are around 800 to 850 a week. That's today's rentals, okay? It comes under the Gold Coast Shire. So I'm not going to dwell on showing these. I'm just giving you some examples of some of the suburbs that are really going up. Greenbank you saw as well. Greenbank, not far from that Park Ridge area. So again, you got 624, 650 for 421, 422, I should say. So this is where we can assist you and talk you through the actual properties. Conscious of time, and I didn't want to go more than an hour and take some questions. So my concluding comments to all of you is always, please don't blindly follow the media. Do your due diligence. Speak to people who know about the market, okay? And with property, always have a long-term view when building a portfolio. So listen, I have been investing in Southeast Queensland since 1988. Okay, my first property in Southeast Queensland was 1988. Since then, I have invested quite a few properties in Southeast Queensland, and I've learned from some experiences as well. Okay, took some risks and bought in a mining town as well, and I would never do that again. So what advice, not so much advice, but what guidance I'm giving you today is based on my learnings over many years. So yes, the first property I bought, it was a brand new 3-bedroom townhouse in 1988. And anybody want to guess the price? $107,000 in a very fast growing area. 107,000. Okay, brand new 3-bedroom townhouse. So property prices will keep going up. What you've got in Southeast Queensland now is 400 suburbs which have joined the $1 million club. 400 suburbs, I'll say that again, which have joined the $1 million club. So if you are picking up house and land at these prices that I've just shown you, you saw what happened in Sydney. Okay. People said, well, you know, Gregory Hills, Riverstone, you can buy a 4-bedroom around that 650. The 650 has become 950 and $1 million. Well, you saw the 10 boxes got ticked. There cannot be a better time for you to look seriously at buying if you haven't already bought a property in Southeast Queensland, it is a fantastic place to get in now for all of those 8 reasons that I gave you, okay? Why do you need to build a property portfolio? And most of you listening today, if both parties are husband and wife or partner are, are both working and got good jobs, there is no reason in the world why you can't have more than 10, 12, 15 properties by the time you retire. Australians are the richest people in the world per capita, more richer than Switzerland and Japan now, because they invest in property, and property values keep going up for the reasons you saw. I will stop there and we will take some questions. If you wanted to contact any of my team at Nivas, the phone numbers and names and emails are there, or you can go to nivasrealestate.com.au and you will find our details there as well. Okay, I'll stop sharing and we will take some questions. Hopefully I've given you some insight into Southeast Queensland, and I am happy to take questions. Thank you.
Awesome. Thank you so much, Sachin. Very, very insightful. A lot of information being shared there. We do have a lot of questions. So we're going to go through it one by one. Starting from Ramesh. In the USA, banks package the loans and sell it to investors. Is that not the case in Australia as well? Whether banks in Australia hold the entire residential loan portfolio in their books?
Ramesh, you are talking about securitization, and you are right. Banks do securitize in the US, and they're the biggest securitization market in the world. And what they do is they bundle up residential mortgages, and then they form a security out of it, and then they actually sell it in the not to mums and dads market, but mostly sold in the professional market, interbank market. Okay. So that was one of the reasons why we had a global financial crisis, is Lehman Brothers and the like. They had a lot of assets which were mortgage-backed securities, they're called mortgage-backed securities, okay? And when the price of the underlying security, which was the houses, actually went down and halved in value, the mortgage-backed securities that the banks were holding in the balance sheet had to be revalued, and by revaluing them, the balance sheet pretty much disappeared, okay? Why were they investing in mortgage-backed securities? Because they were giving them a higher yield, a higher interest rate. So the third largest securitization market in the world, Ramesh, is actually Australia. Okay, US, then UK, then Australia. So I have done 4 securitizations for the banks I've worked for. Personally, I have done them. Okay, I did it for St. George Bank, and I have done them 2 I've done for HSBC. They were all above $1 billion each. Now that securitization market has pretty much died here because banks are not allowed to hold this type of asset class in Australia anymore, okay? Because the APRA is the best regulator in the world for banks. That's why banks have never failed in Australia. And APRA will not allow your liquidity book in your bank to actually have securitized mortgages. Another topic, it's a topic for another day, Ramesh, but I hope I've answered your question.
No, thank you, Sachin. Next question is from Ashish. The influx of migrants would need to buy non-essential goods as they come. So is it a vicious cycle?
Yeah.
How does that factor in?
Very good question, Ashish. Ashish, that's a fantastic question. And that is one of the reasons why our inflation is up. We've got so many people coming and they need non-essential goods. Well, they're actually essential goods. They've got to buy TV, washing machine, and so on, right? They've got to buy a car. They're got to buy all these. It's more the people that are living here that are actually also contributing to it. And we need to all tighten our belts. We need to all stop going out and Uber Eats and all those type of things that we have created the bad habits. We've got to spend less money and tighten our belts. But you're right. Migrants actually are keeping our GDP up because when they come here, they need all of those things. And then the rent going up is not helping either, because that is part of the equation as well. So it is a vicious cycle. You're absolutely right. It has to find some sort of equilibrium soon. And that's why it is taking inflation to come down a lot slower than we would like. Thanks, Ashish.
Awesome. Next question is from Nilesh. Does Southeast Queensland have adverse weather conditions like floods, cyclones, etc.?
Yes, it does, Nilesh. It does, probably a bit more so than we do in New South Wales. If you've been here for more than 10 years, you'd remember the last big floods that they had, and there were at least 50 postcodes in Southeast Queensland that were impacted, probably a bit more than that, to be honest. And I remember being at HSBC at the time, and we took some provisioning and write-offs against those properties because that was quite a big flood. Cyclones come and go, but it doesn't and hasn't impacted Southeast Queensland as much as it's probably impacted North Queensland. Okay, so the more tropical you become, the more cyclones you get, and so as you move further north and get towards Cairns and further north, then those areas are more prone to have cyclones. But listen, you have to do your due diligence. Okay, there are some flood prone areas in particularly the Ipswich Shire, and you must not go anywhere near those flood prone areas. And as far as new areas are concerned, if there's a lot of studies done by the councils on once in 100-year flooding and now once in 200-year flooding. Okay. And before they will release that land, like if you take Sydney, Hawkesbury, we've seen two big floods happening because whenever they open the dam, Hawkesbury floods. And so the councils have reduced the areas that they can actually release for home building. So these things happen, they go on. You have to do your due diligence. You have to be extremely careful. We can assist in that. Your own due diligence through the councils. I mean, we call it Section 149 report in Sydney. There is similar reports over there that your lawyers will do their due diligence. So, but we are happy to talk more about that, Nilesh, but those things do happen, yes.
Awesome. Next question is
but it should not be a deterrent for you to buy a property. Okay. Natural disasters will happen everywhere in the world, right? We even have had earthquakes in Newcastle. That was many years ago. So these things do happen, but they're few and far between.
Yeah, true. The next question is from Karpagam Priya, but I think you have answered the question in the presentation.
Vacancy rates? Okay.
Yeah, so vacancy rates. And
you happy, Karpagam? You happy with that? Okay.
Yes.
yeah. Okay. Awesome.
Okay.
Thank you. Next question is from RK. I can't understand what he actually means. It says higher rentals decrease affordability. RK, could you unmute yourself and sort of clarify what your question is?
Hi, my question is like, if the rents are increasing, the people will try to move to the low affordability areas, right?
Right. Okay. Correct.
So how does there will be an impact on the capital growth and things like that.
So
Yeah,
Specific
yeah. Listen,
environmental-
listen. Good question. Okay. You're right. I mean, affordability of rents is going to be one of the most challenging things for Australians, and it's not just Southeast Queensland. You're seeing it in Sydney as well, where people are moving. I mean, we get calls all the time. I can't afford my rent. Can you find me something cheaper? Okay, so it's happening, but then it's a wave. So the wave actually goes everywhere, and where you've seen 10% growth in rent, it's generally those people that are going to another suburb, it goes up there as well. So you can't really win, to be honest. So people live in the city, then they move to Homebush, then they move to Parramatta, and then they go to Penrith. I don't know. I mean, it's like it's one of those things, right? But the fact is, overall, we've got a shortage of properties. Overall, everywhere rents are going up. There is a shortage across the pitch, unless you want to move to a regional area, right? So regional areas are not in vogue anymore in terms of price growth. And we get asked a lot about regional in this. I just touched on that accidentally, but and I'm happy to answer any questions on regional areas. But you're right. Listen, it won't impact because there will be another person ready in this kind of market to take your property. Okay. So I'll give you an example. I have a property in Carrara in Gold Coast, and it was rented out for $520 a week. Tenants came out in February this year. And my agent there said, okay, we're going to put it to the market because rentals have gone up. You're probably expecting about $620, $630 now. I said, really? Yes. So first opened, 30 people came, and all 30 put an application, and one person took it for $650. Okay. So this is in a increasing rental market. There are still 30 people willing to pay anywhere between $620 to $650. So it's just a sad time for people to be renting when this phenomenon is happening. But unfortunately, this will continue for a good 2 years. Another 2 years easily, could be longer.
Awesome. Thank you, Sachin. Next question is from Ramesh again. Immigrants normally come to Sydney and Melbourne. Is the population growth in Queensland due to immigration?
100%. Please Google, and I didn't put a slide on today, but please Google who are the biggest migrants to Southeast Queensland. You'll find New Zealanders are very high on the list. They do get a few South Africans who don't like Western Australia, and they end up in Gold Coast, particularly those from Cape Town, which is more like Gold Coast. But listen, it's all over the place. The Chinese have found Hope Island, for example. Okay, and they've discovered Hope Island. Hope Island prices went up like 45% in 1 year, and it was, when I'm talking to the agents there, they're all telling me, well, it's all Chinese buyers. They love it because it's a golf course, it's got water, it's got marina, it's close to Gold Coast, it's close to Sanctuary Cove. So migrants are coming from everywhere. They're not all settling in Sydney and Melbourne. You saw the numbers. I mean, 30,000 homes are required in Southeast Queensland, every year for the next 15, 20 years. So, and they do get a lot of mostly Victorians, but New South Wales people as well. Okay.
Awesome.
So it's different type of people moving to different parts of. So Gold Coast is mostly retirees. And so you get a lot of owner occupiers there, but there is a lot more jobs being created in Gold Coast area. Like Westpac has just moved some people there. So there is a lot more jobs being created there. And hospitals being built and universities being built and all these infrastructure going in, which needs more employment. So population growth, employment, those things bring people there. Hopefully I've answered your question, Ramesh.
Awesome. The next question is from Revanth. Revanth is asking, what are the taxes in Queensland, especially for estate investors?
Yep. So if you're buying a property in Queensland, the first thing you've got to watch is stamp duty. Unlike Sydney, if you're buying as an investor, you have to pay your stamp duty within 3 months. If you buy in Queensland, your stamp duty is not paid until after settlement. Okay. So if you buy an apartment there, after settlement. If you buy a land there, then also after settlement. So you've got to manage that. So very similar to New South Wales, and you can Google the actual stamp duty rates and find out. If you need help, Revan, we're happy to help you and send you a link. The other thing would be if you reach a threshold for your land tax. So one of the reasons why people actually spread their portfolio across Australia is to avoid paying land tax. Every state has its own separate land tax threshold. So Queensland's threshold is lower than Sydney because their average home price is lower than Sydney. And then, you've got to work out where your threshold is and work it out accordingly. But again, we can help you with that. We can send you a link on that.
Yep.
They're the two main things to watch for, actually.
Yep, River, I'm happy to take this offline.
Capital gains tax is federal. It's not state-based. Okay.
Awesome. Next question is from Ramesh again. During COVID, internal migration in Brisbane was huge. Will that be sustainable in the near future as well?
Good question, Ramesh. Internal migration was massive. Just around, just after lockdown, it went crazy. People started buying without seeing properties there. People were bidding on auctions from Melbourne and pushing prices up by 10-20% above it has slowed down. Absolutely has slowed down compared to what it was in 2021. But the numbers that are predicted there and planned there by their Queensland Treasury and the Australian Bureau of Statistics and so on takes into account all of the people coming in there. So the numbers that I'm showing you has taken into account not just interstate migration, but New Zealanders, like I said, they're a big migrant community going into Southeast Queensland. They're looking for warmer weather. They've had enough of the cold weather in New Zealand and the floods and the other natural disasters. So listen, it's about the total population and who's coming in there, and that's what's going to fuel it. It's not just about interstate.
Yeah. Just a follow-up question again from Ramesh is there's
regional areas. So regional areas, I say in every time I do a talk, I say to people, do not go by the boom that we saw during and after COVID for regional areas, because that's not sustainable. Okay. It'll normalize, and it has already normalized. Okay. Yes, some people are coming back, but the price growth in New South Wales with the regional side was mostly in the coastal areas. People were having a lifestyle change to the coastal areas. So if you come to me and say, I want to go and buy, in Orange or in Wagga Wagga, I would work very hard to talk you out of it. Okay, just because it's a regional area and there's rental vacancies are low there right now and all that kind of stuff. You got to look at the population growth until 2036 and 2041 and 2056. Those figures are already published. Okay, you can Google it. You can Google it by suburb. If there isn't population growth in a suburb, stay away. Very simple. Okay, there's lots of other better investments. So I wouldn't worry too much about people moving out of Southeast Queensland and going to regional areas, because it used to be called a country town before. It's no longer a country town. You saw the video, okay? It's a pretty big city with a lot of big things happening. So it is growing. I mean, 5 million people, we're talking almost like all of New Zealand living there, okay? So, you got Sydney, Melbourne, and you've got Southeast Queensland. That is where the population is gonna be and is going to be going forward.
Yep. Awesome. Thank you, Sachin.
Do you do established properties too, or only off the plan? Yes, we do established properties as well. And if you're looking for an established property, please feel free to reach out to any of us, and we will help you in that regard as well. We are a buyer's agent. We've got access to a lot of other buyer's agents, and we can certainly have a one-on-one discussion with you and help you out. It doesn't cost you anything, by the way, to have a one-on-one discussion with me. So I urge you, if you want to have a chat, your personal circumstances, I'm more than happy to help you out.
Awesome. Thank you, Sachin. SS says, as the Brisbane.
100%.
Yep.
SS, 100%. 100%. But listen, and I say this to everybody listening today, do not go by 2021, okay? 2021 was an abnormal year and abnormal across the pitch. It was abnormal across the pitch. So the average price growth of 25 to 30%, in some cases in Sydney, people bought land and it's gone up 70, 80% even. That doesn't happen all the time, okay? We've had 3 times in the last 100 years where the average price growth in each state was more than 25%. 3 times in the last 100 years. I say to people, be happy with 7 or 8% a year. There's nothing wrong with it. Okay, it's nothing wrong with it. So you need to be cognizant of that. Can it have, with all the things that are happening in Southeast Queensland, can you see 50% happening over a 5-year period? I would say yes. Over a 5-year period, I would say yes, it's possible.
Sorry, Sachin, my question was different.
Sorry.
I'm asking.
Sorry.
I'm asking. We have seen such a large increase of property prices, like a house which was like 380K is now 560K,
Correct.
which we don't. So is it going to plateau for next 5 years, or is it going to go 5-6% increase?
Thanks. Thanks for clarifying, SS. So keep in mind that Brisbane, unlike Sydney, Southeast Queensland was due for a long time to have an increase. Was due. It was overdue, actually. And I should know because I've been investing there for so many years. And I'm like, why did I invest here? Like, prices are not going up. Not going up as much as Sydney. I should have bought all my properties in Sydney. And then this year, this 2021 came, and I'm not complaining anymore. But it was due for a good 10, 12 years. Okay. So in 2017, when we had a massive boom in Sydney, record prices were achieved everywhere in Sydney in 2017, beginning of 2017, right? January to April of 2017. Southeast Queensland was doing nothing. And everybody kept saying, well, it's going to happen. It's going to happen soon. And it did happen in 2021 and half of 22. So can it go up more from here? Absolutely, it can. What the 50% was a catch-up. There was a catch-up. What is coming up in the next 5 years, you saw what I showed you today, is a mini boom, okay? 400 suburbs, which are already average price of a house is $1 million. I mean, that should tell you. We had that here. Greystanes, Marylands, Clyde, Lidcombe, none of them were $1 million properties 5 years ago here. None of them. We never thought it would be, but it happened rather quickly, didn't it? So you got to keep that in mind. Property is a long-term game. You got to get in at the right. All I'm saying to you, SS, is if you leave it for another 6 months, or 12 months, you look back and say, gee, I should have listened to him. I should have bought something for 650. Okay, that's my point.
Thank you, Sachin.
Okay.
Thank you, SS. Next question is from Amit. How do I understand if the Homeland packages are correctly priced? Where can I find another Apple to compare with? Do you want me to take this?
I mean, yeah, for sure. I mean, you listen, you got to do your homework, right? You got to do your homework. And we had a lot of questions like that when we were selling Adelaide last year. And people said, oh, you're showing me something at 500, I can get something for 400. And when you go and compare, so you can listen, you can Google. Everybody's got Google. You can go ring agents. You can find out what's happening in the area. Do your own homework. And compare. We do that for you, right? we have developers there that are giving us properties at 750 in Park Ridge, and you know what we're telling them? Too expensive, mate. Try again. So we are going to find reputable builders, reputable developers that where we are happy with the price. And
Right.
it's important for us. For us, it's not about getting just a sale. For us, it's about actually doing the homework. If I or Raj are not going to buy a property ourselves, we will not sell it to you. And that is the ethics we live and die by. Right, Raj?
Absolutely. And just to add to Sachin's point as well, Amit, see currently what's going on, as you will see when you go into auctions and stuff, you will see the price point starts very low up, but they end up paying more than $400,000 extra. There's a reason why that happens. And we as an agency, we don't do that. We are very upfront. We are very honest, and we are straightforward. We don't do any hidden costs. All our packages are fixed. And when we say fixed, it's fixed. So this all has been done priorly by us before we present it.
Right. Thank you, both of you guys. Sorry, I just unmuted myself. The purpose of my question here is I did try to find a lot of information on Google for one of the house and land packet that I had just in Southeast Queensland, but I just can't find. I mean, let's say, for example, there's a in Morayfield area, there is a house and land package with 350 square meter land size. I just can't find a sample data of 350 square meter or somewhere around like between 330 to 370 square meter land, which got sold in the.
It's a good point, Amit. It's a good point. Listen, it's and you're right actually. So you have to. A lot of these things are not advertised because you're not allowed to advertise. We're not allowed to advertise anything. Okay, we can't put it on realestate.com or domain. So if you say to me, Morayfield, show me what you've got, we will go not to one developer, we will go to 5 developers, 6 developers, and say, this is where we want. Show me, this is the right, and then we will give you those. We'll present to you what we think is best out of all of those. That's the way to do it. You got to go to agents who know what they're doing, and get that information.
Right. Okay, that makes sense. So, in a nutshell, that information just can't be found.
Sometimes, you know what? Sometimes what happens is there might be an agent who will just put something on REA. Just that it's just a teaser, okay? And they'll just say, and the teaser will always be 50, 60 grand cheaper than what you can buy.
What it is.
And they'll go, oh, no, that one is sold. That one just sold. Can I find you another one? So it's a generic thing, right? Won't have an address, call the agent. It's actually in the real estate code, it is illegal to do that. But it doesn't stop people doing that. Okay. But good question. Good question, Amit.
Thank you, Amit.
MP, what about impact of construction companies folding, supply chain issues, impact on new builds? Yeah, good question, MP. And I get that a lot. I mean, yes, we have had a lot of home builders actually fold, more so than ever before. Okay, we've had the biggest supply chain issue probably in 100 years. We've had the biggest rise in material prices and labor costs that we have seen, anywhere from 25 to 30 to 35% in some places. So where people have given fixed quotes on their house and land packages, and you do that on 30, 40, 50, 100 homes, you can't sustain it, and your cash flow gets impacted, and you end up folding. Okay, that we have seen at least in each of the states on the eastern seaboard. We have probably seen upwards of 10 companies go down. And of course, each time one company goes down, you see it in the news. Some of them are tiny companies, some of them are medium-sized, some of them are really big ones. Okay, they all have had these issues. So the couple of things I would say to that is, you've got to have a little bit more guts to do this. Okay, firstly, so you can't be spooked by what has happened and expect that to happen again. So you got to have some guts to do a house and land package. That's the first thing. Second thing is the prices going up have now all been factored in. And the chances of it going up in that same sort of percentages again in the next 5 years is probably pretty slim. Okay, it's also a once in a 50-year event what we saw. So the developers have factored their prices in for labor and for materials. So from here, when I'm giving you a price, from here for it to go up another 25 to 30%, a shock like COVID that was caused by, is highly unlikely. That's the second thing I'd say. The third thing I will say is, yes, there's a number of companies went down, but there is a number of companies, much, much more. There's at least 500 builders in each of those states. So if 10 or 12 of them went down, the other 490 are still operating. Okay, so a lot of them did not go down. And the fifth thing I will say is that you're protected through insurance. So the worst scenario, and trust me, it's happened to me, okay, in Queensland, not in Southeast Queensland. I bought in a regional area. The builder went broke. Who came in to finish my house? An insurance company. What did it cost me? It cost me an extra nearly 8 or 9 months to get my house. So it cost me a bit of interest costs. Did I still get my house and was it built properly? Yes. So the saving grace after all of the things I've just said is you're going to end up having an insurance, a reputable insurance company that will be behind this. Not all insurance companies insure house construction, okay? If after all of those 5 things, Amit, you're still feeling jittery, go buy an existing property. Okay. I mean, I can't be any clearer in terms of all of that. But you're right, absolutely correct. There is an element of risk, definitely an element of risk.
Yep, just like anything.
And I can't say to you, I'd be lying if I say to you, listen, we've done our due diligence and we know the builder and they've done a lot of good things in the past. Well, in Sydney, Elderton Homes went down. Elderton Homes, it was a household name. Elderton Homes, quality. Elderton meant quality, they went down. So don't, if anybody says to you, I've done my due diligence, don't worry. Don't go by that. Okay? Go by those 5 things I've just told you.
Cool. Next question is from Ajay. Sydney's land deficit. How could we compare Brisbane on an overview? Appear to have far more land to sell.
Brisbane has far more land to sell. Okay. So Ajay, if I understand your question correctly, you're saying that Sydney has fewer lots to sell and Brisbane still has quite a lot of land.
Basically more supply in Brisbane.
Yes. Can you hear me?
Yeah.
Yes.
Yeah, I can. Yeah.
Yes, that's the point. Basically, Sydney is quite a land deficit place, right? It's like a basin, so it doesn't have enough place to expand at all. Yeah,
you are absolutely right. Given our population size and the demand that we have here, there is fewer land. Northwest of Sydney is going to run out of land in about 6 years. And I would say southwest of Sydney is going to run out of land in about 9 to 10 years. So then there will be no more land. Okay. So Queensland has a lot more pockets which are being developed. There are areas in Southeast Queensland that are running out of land, and in particular, that is the Gold Coast area. The Gold Coast area, all the way to Pimpama, Coomera, and what I showed you. That area is going to run out of land in the next couple of years. There'll be no more land like that, and so when land runs out, the prices actually shoot up even more. But all these areas that, I talked about before, Moray Field, Ripley, et cetera.
Yeah.
Yes, there is, but there are some flood prone areas as well. And even though there is land, it takes a long time to develop them. And with this type of population growth that we're talking about, like 1 million more people, in a short space of time, they're going to have to be developing really, really quickly. It's always going to be lagging behind. The demand is not going to be met, and the prices will still keep creeping. So it's not a time at the moment where you'll see the prices are going to plateau for a few years. That could happen in maybe 8 to 10 years time. But at the moment, I'm very bullish about the supply and demand issue in Southeast Queensland.
Yep. Next question is from Wanya. I think you've already answered that question, Sachin, in terms of
floods. Website to do our due diligence. Listen, there's no silver bullet in terms of one website. You just gotta do the review. Sometimes, when you ring a bank and say, I'm looking to purchase a property in this postcode, there will be some banks who will say we don't lend in the postcode. Then there's some issues. Okay, so there's a number of ways of doing your due diligence. You can of course talk to us. We will help out in that area. You can actually talk to the council. You can engage town planners. There's a number of things you can do. But if you have a doubt about an area, okay, but normally the council reports will tell you whether they have had any floods at all in 100 years. And that should be a good indicator for you.
Okay, next question is from SS. Is subdivision of all houses into townhouses possible in Southeast Queensland in the next 5 years? If yes, with suburbs, that's probably going to be a bit hard.
SS, please talk to us. We can find you one of those properties where you will be able to do townhouses. Of course, there are subdivisions. Every city in Australia has subdivision potential. So if you're talking about Southeast Queensland, I bought a land in Loganshire and did a DA for 11 townhouses. And after doing I did not develop it. After doing the townhouses and getting the DA approval, I sold it. Okay, so absolutely, we have experience in that space. Talk to us. We can find you any type of property you're looking for, depending on where you're looking and what your budget is.
Thank you, Sachin.
Welcome, SS.
Thank you, SS. Next question is from Murli. What are the other industries other than mining in Queensland? Basically, because the last downturn was when there was the mining slowdown, there was a downturn, I think.
Good question. There is mining is big. There's no question. Queensland is big in mining. Queensland's economy also, with all of this energy stuff that is going on at the moment, they are going to be very big in the renewable space. There is a lot of manufacturing, engineering, and other things happening over there as well. They're big in the service industry. So tourism, they would be the biggest in terms of tourism, Southeast Queensland, certainly. Listen, it's not like Western Australia, where mining makes up a massive part of everything they do. So there is a lot more industries in Queensland. But if you wanted us, and I actually was gonna do a slide on that today, and thought it would make my session too long, but I will, Murli, I can share that with you in terms of the industries and their contribution to GDP and so on. All of this is actually if you go to the Queensland government website, .gov.au website, you will actually find a lot of that type of information there. But let us know if you need further insights.
Cool. Next question is from Vic. As compared to Queensland, how is Western Australia for investors?
Listen, in terms of affordability, I would say, and rental crisis at the moment and shortage of properties, they tick the boxes. Yeah, well, Perth ticks the boxes. In terms of the 8 things that I had for Southeast Queensland, I would say probably only 4 of those 8 would be relevant to Western Australia and Perth. So I would say you need strong population growth, a lot of money in the infrastructure side, a lot of new things happening that you saw, and that's why after certain parts of Sydney, my next pick would be Southeast Queensland, and that is the very reason why my team brainstormed where would we buy a property next, and Southeast Queensland was on top of our list. Okay, apart from some of the projects we've got in Sydney. So Western Australia probably ranks after, I would say after Sydney and Southeast Queensland. I would probably put Victoria, Melbourne, some of the Melbourne suburbs ahead of Western Australia. That is my view, Vic. But if you find a bargain and you know, and done your due diligence, then I don't stop anybody from buying a property anywhere, because ultimately it is going to go up. It's just a matter of whether one place will double in 7 years and the other place might only go up 20% in 7 years. And having said that, I have invested in one property in Perth, and I've had it for about 7 years now, and the growth has not been great. The rentals have been great, but the price growth hasn't been great. And it maybe I bought the wrong property, so don't go by that. But that is my personal experience.
Thank you, Sachin. Next question from Ajay. Sydney and Melbourne has high-paid jobs like finance, IT, which contributes to high serviceability. Does Brisbane, Gold Coast, and so I guess he's saying Southeast Queensland has Sunshine Coast has similar settings?
Yeah, listen, Ajay. I mean, listen, most of 80% of the head offices of Australian companies are either based in Sydney or Melbourne. So that's always going to be your big employer. Okay. I mean, listed companies, large listed companies. So, but that's not to say, so if you say big four banks, ANZ and NAB are in Melbourne, Westpac and CBA are in Sydney. They're moving. They are setting up outside. So a good example would be UE Insurance. Everybody heard of UE Insurance?
Yeah.
Well, they've got a big setup. Where did they set up? Sunshine Coast. Where did Westpac actually set up? The most recent setup in Australia has been in Gold Coast. And a lot of people putting their hand up saying, I want to go and live there and I want to go and work there. Okay, within the Westpac. If anybody from Westpac is listening, they would know what I'm talking about. So there are more industries moving out there. There are, of course, a lot of mining companies there. There is and a lot of service industries there. But with these things do change. These things do change, and you know, you'll find more and more people will be enticed to go to places like Sunshine Coast and Gold Coast because they are giving them some real tax breaks, to come there. So that's the reason. And I can share what some of these companies actually have had to say about why they moved there. I've got some videos around that, AJ. Awesome. But overall, you know, there's banks everywhere. Okay, there's Bank of Queensland there. There's Suncorp Metway Bank there. There's all industries are there, but they're not at the same scale as you have got in Sydney and Melbourne. That's catching up.
It's catching up. Yes, that's it. Murli asks if we have similar research on Western Australia. This was a wonderful information. Thank you for sharing. Thank you, Murli, for that.
Happy to chat offline, Murli. Happy to chat offline.
Yep, we can take this offline, Murli, for sure. Next one is, thank you for the amazing webinar. If an investor has option of buying an apartment opposite to Tallawong Station, Sydney, versus a house in suburbs in Southeast Queensland through your house and land package, which one would you recommend? Thanks, Karthik.
Karthik, thanks for that question. We do sell those apartments that you mentioned. And we do sell, of course, Southeast Queensland. And we do have many other projects in Sydney that we can show you if you're looking for apartment projects. Now, it's a great question. And we started selling at the Tallawong apartments some time back, and two-bedders were around. Nothing settled yet. So end of this year will be stage one. I think early next year could be stage one. So they started at around 650, and the apartments are now actually selling. Two-bedders are now selling for around that 730 to 740 mark. So it's not settled yet, but it's still already had a runoff, a good runoff, 80, 90,000 profit for those that bought at that lower end. Tallawong will likely, because of its location and good development, it'll likely go up perhaps another 50,000, because there's at least another 2 to 3 price increases before the fresh lots will settle. So, and rents are probably also going to go up significantly. And there may be some people listening here who have bought from us over there. So it is all to do with timing. And again, I would caution that you buy the right property at the right time, you will see capital gain. And the other thing I will say is that even after settlement, there's airport coming up and other things happening, and more infrastructure coming up, Rouse Hill Hospital and other things coming up, which will boost the prices in that Rouse Hill area, not just for Tallawong, but others. But if you want a comparison to the Tallawong property, we have got another project called Babylon, which is at the moment below market, good 50 to 60,000 below where the Tallawong property is. And we would be happy to talk to you about that as well. But listen, I don't have a crystal ball. I'm human, right? So if you buy one of these, and what will happen in 5 years' time could be very different between one and the other. They might both have the same. One might be more, one might be less. What you are not doing, though, is what some people did, buying a $1 million 2-bedroom apartment in Rhodes 5 years ago off the plan, settled 2.5 years ago, and they did not see any growth during 2021, still worth $1 million. So you're not making a mistake still by buying something where there is value and there is growth to happen. With Rhodes' example, it is the wrong price, wrong property, wrong time.
Yep.
Okay.
Thank you, Sachin. The next question.
Happy to take this offline as well, Karthik. Feel free to reach out to us.
Yes, Karthik, feel free to reach out. We can definitely take this offline. There's some other projects that we can talk about, which may be much more suitable than Tallawong at this stage. Next question is from Jitesh. You mentioned your buyer's agents. What is the fees you charge, the percentage?
I can answer that.
Yep.
Listen, Jitesh, we're generally at around $15,000 up to $1 million. And then above $1 million, it goes to 2%.
Yep. Thank you for that.
To look for a property, it takes significant amount of time, because everybody's requirements are different. And we do not want to just show a property that ticks your boxes. We want to find exactly the right property that we would buy for the specs you give us. So the time spent, it cannot be underestimated with some of this. And most of the time we say to people, if you pay us that money, we will at least bargain it so that do all the bargaining and all of the savings that we possibly can so that you get more than your money back.
Yep, absolutely. Thank you for that, Sachin. So the next question is from Vic again. Just a thought and not a question. Inflation also boosts property prices. Construction prices have increased around 25%, which in turn pushes up the house build in the last 5 to 10 years, which is a fair point.
Vic, I agree with you 100%. And that has already happened. And that's why construction, if you want to build a house here or in anywhere else, is going to cost you more. If you want to buy an apartment, it's going to cost you more. So this is very, very true in across the pitch, actually. So that's why, in Sydney, we are very bullish about apartment prices going up significantly.
Yep.
Yep.
Next question is from SJ. Do you sell single contract?
Yes, we do. SJ. We do. And I did not show any today. I very quickly skimmed through some of the good packages we wanted to showcase. but we can find them for you. You'll always find that an SMSF house and land package will cost you more than the same house that is on 2 contracts. And the reason for that is the developer is building it after having to pay for the land and the stamp duty on the land. And then the developer is actually has holding costs in actually building the house for however long it takes, 6 months, 9 months. So you come in at the completion of the house. So they build all those costs into the house and land package, and you end up paying 30, 40, 50,000 more. So people ask us, why is this more costly? They are the reasons why it's more costly. Unfortunate. And then when you go and borrow money from the bank for an SMSF purchase, they charge you a higher interest rate as well and give you a lower LVR. So everything's stacked against you when you're buying as an SMSF. The only difference is if you buy an apartment or a townhouse or a villa or a duplex, then those things don't come into play as much.
Absolutely. Thank you, Sachin. Next question is from Amit. In my opinion, north of Brisbane and north of Gold Coast would be the real boomers in comparison to west, Gold Coast and Sunshine Coast. Reason not much land left. Any thoughts there?
Yeah, listen, Gold Coast, I agree with you. I mean, places like Coomera and Pimpama have gone up a lot in value. We were selling Coomera 4-bedroom houses for 450. Now try buying something for under 900. So absolutely right. Land is running out. West of Brisbane, listen, it's your entry level is higher, right? So if you're buying a house for 950 in Coomera, yes. Is that going to grow more? Yes, it will. But is it going to grow faster than something 650 in Ripley? I would sort of say 650 in Ripley might do better in the next 3 to 4 years. It might have so some of these suburbs like Coomera has already had a very, very, very strong run in the last 5-6 years, and it might sort of plateau a little bit. Yeah, it might not be. So I can take this offline, Amit, and discuss your specific requirements. Sunshine Coast has gone up a lot, but there's a lot happening there as well, with hospital, with a lot more industries moving in there, and it's a nice place to live. Land is running out in certain parts of Southeast Queensland, and there's more in other parts. But if you take the example of, if I can draw a analogy with Tallawong, not the apartment, but Tallawong Road. So there's still a lot of land around there, still a lot of undeveloped land around there, but people who bought land in Tallawong in late 2020 and early 2021 for 550 for a 300 square meter block, it's now worth 900 for your block. So it's not always the case. It's where there is significant population growth and demand, you might still see prices going up. Springfield is another area in Ipswichshire that has had significant growth.
Awesome.
And will continue to grow. Okay.
Okay, next question is from Sainia. As an investor, shouldn't we buy old established houses with big land size rather than new with small land size? With time, land appreciates and building value depreciates.
Sainia, listen, I get this a lot from people, and I get this question a lot as well. So when we sold at Park Ridge 2 years ago to people for 450, the example I used many times today, there were not more than 350 square meter blocks. They were between 300 and 350, most of them, okay? And they saw massive growth. So 450 became 680 today, yeah? And the rentals went through, they were getting 450 rent, now it's like 600 plus rent. So so it's not always the case. When you're buying a brand new house, as an investor, you're getting a lot more depreciation. You're getting a longer structural warranty on it. All of those things come into play. If you're looking for land with an old established house, then I would suggest you look for a big land, like 1,000 square meters, where you might be able to maybe do a subdivision in the back or something, or do a granny flat in the back where you don't have to pay for the land again, just the build cost, and get a higher return on your property. But I can take this offline, Sania. In Australia, they say horses for courses. If the course is rainy, they run a different horse and put a different jockey. If it's dry, they put a different jockey and a different horse. Okay, so it depends on what you're looking for. Sometimes, you can find something which is an established property with a good sized block of land, and we can find that for you. You might get a better investment that way as well. But there's absolutely nothing wrong with buying a house and land package. Nobody cuts 400, 500 square meter blocks anymore. It is all getting smaller and smaller. Queensland actually have caught up with Sydney now. They're also in the 300 average square meter blocks now. Unfortunately, the quarter-acre dream has very quickly disappeared.
Absolutely. And if I may, I just want to add something to Sania's thing in terms of land appreciates. And see, in the last couple of years, we've seen what happened in Marsden Park, Box Hill, Schofields, and these areas. And it's not that there wasn't larger land available in Sydney. There was, but it's just the desirability of the suburb. So that and the location is a big factor that which you have to consider when you even purchase. So bigger land in anywhere, it's not going to be.
Yeah, correct. Good point, Rajan. And so if you take that theory to apartments, then you'd never buy an apartment. But I can assure you, apartments go up. Over time, apartments go up just as much as houses do. Okay, the last 3 years is not the right proxy to use for apartment price growth. It is due to catch up. So yeah, it's where the demand is, really. It's where the demand is.
Awesome.
You're gonna pay a premium for a big block of land. You're gonna pay a premium as well nowadays. Okay.
Awesome. Thank you, Sachin. Thanks, Prasad. Thank you, SS, and thank you, Sushmit. The next question is from Venkat. Isn't a house land package more costly than an established property in Southeast Queensland, especially with construction issues and the overall price?
Costlier than an established property? Of course it is. Of course it is. Everywhere, not just in Southeast Queensland, Venkat. Everywhere. You go to any suburb, and these are of course new suburbs, and you find a established property. It's a second-hand property. A brand new property will always be more, and for the same reasons. You got more structural warranty. You've got a brand new property, which is different to where somebody's already rented for 4 or 5 years or 10 years in some cases. So and you get depreciation on your investment, which is a big deduction for you every year in your tax. So that's always the case. If you're buying something which is more than 10 years old, or more than, sometimes in some cases more than 5 years old, the inclusions might not be as nice as buying a brand new property. So people are now getting more savvy with some of the inclusions that they've got: higher ceilings, timber floors, ducted air conditioning, all of those type of things. So it's again, it's you got to compare apples with oranges, and you're gonna have to make a decision whether you buy an apple or an orange. Okay, next one.
Thank you. Thank you, SS. Satinder, to be exact. I've noted your details, and we'll organize a time to definitely.
Certainly, SS. I'm glad you found it, Satinder. Found it useful. Happy to. My job in life now is to help people accumulate wealth through property. That's what I get a buzz out of. And Raj will tell you that. Okay.
I think you would have downloaded a decade of your knowledge into us today. So thank you for that.
Thank you, and more than happy to help you make the right decisions, because every day we see people making bad decisions.
Well, it seems like
Possible.
it's all thank you
We'll
messages.
take it offline. Call us, Satinder, and we'll make a time. Yeah.
Thank
Sure,
you.
thank you.
Thank you, SJ.
No
Thank
worries.
you, Vic, as well, for the kind messages. We're glad you found it insightful. I think that's it for the questions.
Okay.
Sachin.
Thank you. Thanks, everyone. Thanks for staying so late, and hopefully you found it useful. As I said, we Raj, myself, Rameth, Nakul, there's a number of people, Sanjay, Seti, there's a number of my team members, and those that invited you today are available. You know where to find us. We'll be happy to help you with your next purchase.
Sachin, is it possible to share this Prezzo if it's not an IP?
No, we're happy to share. Absolutely happy to share. Yeah, we'll
Please,
share. We'll share with you the recording for today. We'll share with you that 24-page booklet, and anything else you would like. Yeah.
This presentation which you showed
Okay,
today.
perfect. No problem. Reach out to us. Thank you.
Yeah,
Okay, thanks everyone. Then
Thank you, guys. Have a good night.
you stop there, and thanks again for joining us.
Thank you so much, Sachin. Thank you.
Thanks, guys.